Good afternoon, financial professionals. Abby Fletcher here of E4 Insurance Services, welcoming you to the BREW, building relationships every week. Thanks for tuning in today. For those of you that are joining the BREW for the first time, we like to start the BREWcast by celebrating today's National Day for August 19th. First up, it's National Aviation Day. So for all you flight enthusiasts out there, today is your day. Also, National Bow Day. Bows in your hair, bow ties, bows on big gifts, my favorite. And lastly, it's National Soft Serve Ice Cream Day. It's summer, friends. Treat yourself to a cone. Today on the BREW, we have our partner Richard Thoma, who serves as the sales manager of Securian. He'll be sharing a split 1035 exchange concept that they've been having great success with and ways to incorporate this concept into your practice. Feel free to use the chat box to share your thoughts and questions while Richard is live. I'll be keeping an eye out for your questions so we can provide real-time answers. Also, all attendees are in a drawing for a prize that we'll be announcing the winner shortly, so stay tuned. Thanks for tuning in, and without further ado, Richard, welcome. The mic is yours.
Abby, thank you for the introduction, and thank you to everybody for joining us on the BREW today. Interesting that you say today is National Pilots Day, because one thing about Securian that a lot of people don't know is we are one of the best companies in the industry when it comes to underwriting for aviation. We used to hold the group life contract for the old Northwest Airlines. We held the association contract for the American Pilots Association for decades. And because of that, we've really come a long way when it comes to underwriting for pilots. So if any agents out there are working with pilots or clients who are looking to become pilots, Securian's a great home for that business. So since you mentioned it, I thought I'd bring it up. We don't have any sort of special programs for people who have bows in their hair or excessive ice cream eaters, but pilots, we're really good at underwriting. Thanks again, everybody, for joining us today. I'm Richard Thoma. I'm the Regional Sales Manager here at Securian Financial / Minnesota Life. And today I just want to quickly go over how we are handling underwriting during COVID, and then talk a little bit about a sales idea we found some really great success with at Securian, and that's a split 1035 solution. So our COVID guidelines are currently extended to 9/15, aka September 15th. We'll get some better context here probably in the next few weeks, if not days, about whether that's going to be extended beyond September 15th. But as of today, Securian, similar to some other companies in the industry, is not accepting new applications for insured 71 or older. Between 61 to 70, you got to be standard or better to issue the contract. Between 51 and 60, we're looking at table B as in boy or better to issue the contract. And at 50 and under, you need to be table F as in Frank or better to issue the contract. So I know the underwriting guidelines due to COVID are causing some contention in the industry, but we're thinking the end is in sight pretty soon here. And we're hoping that any cases that got held off during COVID because of some of the underwriting guidelines are going to be able to be submitted and approved pretty quickly after that. The big one here is you got to be standard or better between 61 and 70 at Securian in order to qualify for coverage this time. And we're not accepting new applications for insured 71 or older. Something we did do during COVID time to make business easier for you was we enhanced our RightFit program, our accelerated underwriting program. So for clients 50 and below, we're able to get them up to 3 million of coverage. Again, 3 million of coverage for clients 50 and below, standard non-tobacco, all the way up to preferred select non-tobacco, which is our best class. For clients between 51 and 60, we can get them up to 1 million of coverage. Again, standard non-tobacco up to preferred best non-tobacco. And that's any product, any rider. So during COVID, while we announced our participation guidelines we talked about on the last slide, we actually boosted that number for clients 50 and below. It was 2 million, but we're now up to 3 million of coverage. We're looking at upwards of 65% of people actually able to be accelerated in our accelerated program, which is one of the highest numbers in the industry. So when you, Mr. and Mrs. Financial Professional, are looking at your client, you can actually say with great certainty, if you pick Minnesota Life as their place for coverage, that they can actually get accelerated through our program. And the stats flesh that out here. Over 65% acceleration rate, like I mentioned on the last slide, and 86% of them are approved at preferred or better. That's a really big number. We're actually able to get 86% of people preferred or preferred select. You can see the breakdown here. When you compare traditional underwriting through our RightFit program, we're actually able to get them better ratings through RightFit than we were through our traditional underwriting program, which is a huge win for the program. If you guys are looking at where we're seeing the best outcomes, it's through accelerated underwriting, not through traditional underwriting anymore. What's unique about us is we're able to actually do accelerated underwriting business in New York, if you guys have any clients in New York, and we do accelerated underwriting for tobacco cases as well. So I'll leave you guys with this. If you're looking for a carrier during these COVID times of social distancing, where you can comfortably place the business and it can get done in a seamless electronic fashion, Minnesota Life's the perfect home for that business. From our e-application all the way to e-delivery, we are able to make the process as paperless and as easy as possible. We keep coming out with improvements to make it as easy and seamless as we possibly can. Any questions on our e-solutions at all?
I'm not seeing any pop up, Richard.
Perfect. So with that, we're going to move on to our policy review / split 1035 sales idea. And we call it a sales idea, but actually it's more of a case study because this is a case that actually came to fruition. And it was something we worked on with our policy review kit. I'll make sure you guys all have a copy of this. But with our policy review kit, one of our agents discovered that he had a client, a 48-year-old male, who had an old adjustable life contract with a carrier who I don't think exists any longer, Talcott Life. They had a death benefit of $581,000 and $287,000 of 1035 value. Now, again, this is kind of your pie in the sky situation, but this sales idea can be used in a lot of other scenarios here, and I'll go into that a little bit. So when we started talking about what the needs this 48-year-old male had, he wanted to maintain a death benefit for his beneficiaries that was fully guaranteed. Plus, he wanted a pool of long-term care. Now, a lot of people think with a 1035, you can only 1035 one policy into one policy. But something you could do at Securian and other companies is actually take that 1035 and split it between 2 different contracts. You can actually split it between 2, 3, 4, 5 different contracts if you really needed to. All you need is the same owner and the same insured. So for this, we took the 1035 value and split it between 2 different contracts. We split it between our SecureCare UL, which is a linked benefit product, and our Eclipse Protector 2 IUL, which is a guaranteed death benefit solution. So SecureCare UL is what we started with. We solved for the amount of premium necessary to get 5,000 of day one long-term care benefit on a 6-year basis, 3% compound inflation. Turned out that number was about 75,000 of 1035. That purchased us, again, 5,000 day one benefit. And by the time the client was age 80, using that 3% compound inflation, they had about $1 million of total long-term care, or $12,800 a month at age 80. Again, it's a cash indemnity policy. So if the client qualifies, they qualify. No need to submit receipts or anything like that. We then took the balance of the 1035 money, which is about $210,000, and we put it in our Eclipse Protector 2. Taking advantage of the RightFit accelerated underwriting program we talked about earlier, we were able to purchase almost 1.1 million of guaranteed death benefit to age 120 at preferred non-tobacco. Now, the client was afraid of losing their liquidity, so it was good to point out that on the Eclipse Protector 2, using our illustrated rate of return in the S&P 500, the surrender value at year 15 was $321,000, and the Secure Care contract has a 100% return of premium guaranteed after year 5. So liquidity was still there for the client too. So when we look at what we accomplished, we took that $287,000 in cash value, created nearly $1.1 million of death benefit, created a $1 million pool of long-term care at average age of claim, and did not greatly impact liquidity. If you look at the death benefit IRR, which is one of my favorite numbers to talk about when we look at death benefit focused policies, we got a 4.08% IRR tax-free at life expectancy of 87 or so. Now take that number and calculate the tax equivalent yield, particularly a tax equivalent yield in 45 plus years when the client is assuming mortality. You're looking at a number that's much higher than 6%, which again, if you can guarantee a client a 6% rate of return, you're doing something right. And in this situation, with the guaranteed death benefit, calculating the tax equivalent yield, you're looking at over a 6% guaranteed tax equivalent yield. Now, when we look at that situation, it kind of looks like a pie in the sky scenario, and it really is. It's a scenario where you've got a 48-year-old client who's got a truckload of 1035 money. Not everybody's got a client like that. But here's a situation that I consider a little bit more realistic. It's a 60-year-old male. He's got about $100,000 in 1035 money. Let's say, and actually my father was a very similar situation. Bought a whole life policy from one of his buddies in his early 20s when he started working, kept funding it, and over time, by the time my dad was around 60 years old, he had about $100,000 in a whole life contract. A lot of clients are going to be in a similar boat. If you ask the right questions, if you're doing the policy review, if they talk about their life insurance with you, you're going to find that a lot of them ended up purchasing that whole life contract from their friend in their 20s, and now they're 60, 65 years old, and they've got a lot of cash value in there. It's a situation here where I said, okay, what happens if we 50-50 split it? We took the Secure Care, we put $50,000 in there of the 1035, purchases us about $5,000 monthly at age 80, and about $380,000 of total long-term care. Now the client still wants to leave a legacy to their kids/grandkids. So with the Eclipse Protector 2, we take $50,000, 1035 it into that, purchases about $150,000 in death benefit, guaranteed out to 120, again, assuming preferred non-tobacco underwriting. Any questions at all?
Not seeing any in the chat box.
Well, perfect. Thanks again, guys. If you have any questions on the split 1035 concept, feel free to reach out to myself or your wonderful team at E4, and I know they can help you out.
Thanks, Richard. Great share today. I've
Hey,
opened
Richard.
up the...
Yep.
Oh, go ahead.
Richard, hey, it's Dan. Have you looked at what, if you put the whole 100, how does it compare to putting it in your product with an LTC rider, just into a life policy?
Yeah, that's a great question, Dan. And if you put the whole 100 into an Eclipse Protector 2 with a chronic illness rider, you get about 300,000 or so of death benefit, a little bit more. So if you're looking at maximizing a long-term care pool, you're better off doing the 50,000 into Secure Care with an inflation rider.
Right, because at age 80, you had a pool of about 380, so you can access that, and you still have the death benefit of 150.
Correct. It's really a best of both worlds scenario.
Good. Appreciate that. Thanks.
Absolutely. Thank you, guys.
Thanks, Dan. Any other questions from the audience? Okay, well, now's the time to announce our winner. Richard, I'm going to ask you to grab into your virtual top hat and give me a number between 1 and 17.
Well, let's see. I'm from Milwaukee, Wisconsin myself, and I was born and raised a Packer fan. So I'm gonna pick number 4 for Brett Favre.
Oh, you're playing right into this audience, Richard. Got a lot of Wisconsin fans. Let's see, who's the winner? Who's the winner? Jeremy Vidmar, congrats. Be on the lookout for a Starbucks gift card coming your way from all of us here at E4 Insurance Services. And be sure to tune in next Wednesday for The Brew. We'll have Brad Newcomb discussing the ever-relevant topic, cross-endorsement buy-sell. Thanks, friends, and make it a great day.